Because the world today is designed differently. Most economists, 95% economists, is working on an aggregate demand story, but it's really about aggregate supply. So what the world is short of is real tangible assets, and it's long intangibles like IPs and platforms and the like. So you and I can get our toilet paper one day early from whatever service we use, but our ability to actually put baseload electricity in the grid, or getting a transportation of a ship, or getting commodities at the last mile is very difficult. And on top of that, a number of countries, including Australia, is short on labor. And in the case of Australia, labor cost is going to come very, very fast and all of a sudden.
Let's talk about Australia now. The Reserve Bank governor spoke last week, and the market interpreted those comments with respect to interest rate rises is that they will continue to come but will moderate. What's your call on that?
I think, similar to me, I don't think the RBA has any clue about what the future holds, exactly because of these consequences. That what you've seen, I think, in the public domain in Australia is sort of a semi-split between the Treasury, the Finance Department, the Treasury Department and the RBA. The government wants wages to go up, and of course the RBA wants wages to reflect productivity. What is lost in this story is the productivity, which is still lagging behind, and that the disposable income is negative. So no, I don't think the RBA has any ability to predict the rates. Neither did they have it 1 year ago or 2 years ago. I think part of the problem for central bank is to have a very dogmatic 1970s style econometric model that predicts inflation. And as I just alluded to before, we are in a supply constraint. Simply, the private sector is too small, or the real economy is too small for the overall aspiration of fiscal, monetary and green transformation.
So the governor in his speech said that there is a narrow pathway out of this to avoid recession. Do you agree with that or not?
Yeah, define narrow, but it's just words. And what they're really saying is that we have no predictability on the ability to navigate this. We don't know how aggregate demand is going to be impacted from the interest rate. And remember, the Australian balance sheet, the private balance sheet, is in a very good shape, simply because the pandemic was the single biggest transfer of money from the governments to the private sector ever in history. So the slowdown in housing prices, the slowdown in assets, the ability to have a real impact on you and I's purchasing power is smaller than it usually is in this cycle, simply because we have a higher level to start from.
Your outlook for Q3, and indeed probably for the rest of the year, is calling for a paradigm shift, that inflation will be the great equaliser. What do you mean by that, and what happens if markets fail to recognise this?
Yeah, so in a futures market, there's a saying, if you want lower prices, you need higher prices. So this fact that we actually have such a high level of cost in the economy means that everybody adapts very, very quickly. I think you can recognize that over the last 20 years, nothing has really changed in Australia. It all became about being long real estate and dividends from the banking and insurance sector. That's not what we need. What we need is productivity. We need the real economy to pick up. And in order for the real economy to pick up, there needs to be a paradigm shift into investment in actually people, which is good news, education, and then setting the side on an economy which is far more balanced in terms of this tangible and intangibles. The tangible assets today is less than 70% of the global value of stocks. So we need that to move. Basically, there's too much IP, too many ideas about what platform to operate on, but we can't deliver the basic needs of clean air, clean water, and certainly baseload electricity into the system.
Well, speaking of electricity, we know that over in Europe and particularly the UK, there is an energy crisis looming there. They have UK CPI and PPI also out this week. There's a surge of inflation. A lot of analysts are saying that a recession is already baked in, but all is on pause for the next week while the country and the world mourns the passing of the Queen. What is your view on the UK economy in light of all these issues?
Taking aside the mourning of the Queen, of course, but the overall economy has a fundamental problem, which is that they run a current account and a budget deficit. On top of that, the sterling continues to be weaker, so the inflationary impulse is very, very strong. It has somewhat been capped by the new and incoming Prime Minister Truss, because of course he put a cap on electricity bills at £2,500, which is still massive in relative scale. But we know from history, trying to cap any sort of impact from the commodity market, or in this case electricity, which is generated off the commodity market, will not work. It only builds the pressure, and it extends the period in which we have a high level in inflation. So let me also be clear, when I talk about high inflation, I'm not talking about that the UK will have 10% inflation for the rest of the lifetime. No, what I'm talking about that the average inflation rate over the next 5 years will be at a bare minimum double the rate that we've seen in the past. Similar for Australia, similar for Europe, similar for the US.
Steen Jacobsen, great talking to you. Thank you for joining us on The Business.
Thank you very much for having me. It's always a great pleasure being in Australia. Thank you.